Hey everybody, I'm doing this video now so I can break down to you guys on this strategy and how this system works together with the whole entire sequence, okay? The sequence basically, which I'll be breaking down in this video, is how absorption, acceptance links together to a sequence, okay? To start off with absorption, absorption tells us where the market cares, okay? Absorption shows up where aggressive buyers or sellers step in with size, but price fails to move in their direction. That means the larger participant is absorbing that pressure and defending a level on higher time frames. This is critical because it identifies important inventory and potential turning points, not noise. After absorption, typically next comes acceptance, okay? Acceptance tells us whether the market agrees. Acceptance happens when price breaks structure and holds it with a strong participation in expanding order flow. This confirms that initiative traders are now in control and that the auction is being accepted in new prices. Acceptance alone is directional confirmation, but it does not tell us that control will persist. Then, after acceptance, we move on to the sequence, which this is one of our most important and key factors, okay? The sequence tells us that control survives time. Sequence requires continuation first, then acceptance on the following bar. That means the market didn't just break out, it held the breakout, it attracted participation and avoided rejection. This is powerful because it confirms a real shift in regime, not just a one-bar event, such as with acceptance, okay? This combination finds strong moves because absorption defines the level, acceptance confirms the initiative, and sequence proves persistence. With all that, just one thing that I want you to understand is that sequence is not late here. It's optimal because the higher time frame strength is defined by time acceptance, not speed. Absorption shows us the level, acceptance shows us direction, and sequence confirms the move is real. All right, so let's get down into it. All right, so what we're honestly looking for in this is going to be located down here on our CVD. If you pull it up, this is our all-in-one ultra CVD and failed auction flow, AB, acceptance, and sequence. Okay, so honestly right now, which I will be making a quick update to this, but if you go into the alerts for this, you do have a few different alerts, but the main one that you're looking for is the sequence long or the sequence short. Okay, I'm going to add to this after I make this video for the whole entire process, which the alerts will show up in here. Well, it will show absorption, acceptance, then sequence, so then you will be able to get alert as the whole entire process has unfolded, right? But if you want to just use the sequence long, sequence short singly, you can, but I will be making an edit to this as well, okay? So you will find your sequence down here. I know sometimes it is kind of a little hard to see, but I'm going to give you guys an explanation of where it is. So your sequence, which is in here, are going to be your these baby blue triangles that you find right here, right? It also has acceptance in there, so that's why the words are kind of hard to make out, because it is showing sequence and then it is showing acceptance long in this right here. Okay, your opposite ones that you will find for sequence are going to be right here, which is going to be this dark blue. So you're going to be looking for either the dark blue or the baby blue arrows. What this says acceptance short, and that's why you see the S there at the end of that. And that's when you'll see the L at the end where it says acceptance long, but this is part of the sequence, okay? Dark blue, baby blue. All right, so let's move on and give you guys these little breakdowns as far as what it is that you are looking for, right? Sometimes you will find them up in higher parts of the day. So this is good to find trades, whether it's on the weekly or on the daily time frame. Sometimes for intradays, you can also find them on a 2-hour time frame as well. To find them on the higher time frames will most likely give you better and stronger moves. Okay, so even in a scenario such as down here where we find ourselves, right? We did have this absorption zone from day to day where price got absorbed here on the 30th and price got absorbed here on the 31st. Okay, after that, when we had our breakout of this zone, right, we found acceptance. Okay, this is actually a little edit that I made. So I'm going to put on the regular one that you guys will see here. Let me let me just kind of step out of here. Let me grab our labels and put this over here for you guys. Okay, I'm not gonna show the one I have to edit because it says break down there. That's just something I did, something I was kind of toying around with. So on your CVD flow and labels, I think that I just, okay, well, you know what? I think I did change that on mine. But anyway, so what you guys are going to see is that it's going to say acceptance right here on the label where it is saying break. Like I said, that's just an edit that I made to mine's, something that I was working on, testing on. So you will find your absorption zones and then you will find your acceptance. Okay. After your acceptance, then you find sequence, right? That is highlighted down here in your lower part of your CVD. This is what I was explaining, right? After you find your absorption, your acceptance, then you can look for follow through after you've seen plays like this set up. So typically you would have just seen before we got to this day, we would have seen our absorption. Now we find our acceptance as price has moved higher, right? Some people may feel like if they were chasing trades or anything of that nature, right? So kind of like I explained in the other video that some of you guys have seen as far as mapping out and how I map out my trades, where I placed our Fibonacci tool, our horizontal line, our horizontal ray from top to bottom to be able to find our plays or getting ready to map out for today. So in a situation like this, you would have had everything already kind of set up looking for a possible continuation of that trade. And as we just go ahead and we open up and press our play button. So now we have our daily candle that printed. So for on our intraday trades, what we would have been looking for is for a price to have a breakout on our intraday trade, because now we know that we've already had absorption, we've already had acceptance. So now we're looking for a price to continue upwards, right? We see that when the market opened up, it was in between the 50% of the prior day, and it was also in between the high of the day, right? A good area for us to be in, because now, as we've done our previous day's mapping after we've identified the zone, we want to see a break above and continue onwards, right? And that's going to give us our acceptance, right? So now that we know that the process has been complete, we understand that the initiative has continued to move forward, right? Let me break out this dashboard so then I can also kind of give you guys a little bit of a view. I'm going to just push this back one day to our day of acceptance. So then you guys can also kind of identify everything as far as once it broke out of the zone, right? And we have our acceptance on the day on our Monday, right? We see here on our Delta, our CVD dashboard, right? Our Delta is strong, right? With over, what is that, 1,857,067 on our Delta. The CVD is strong, right? At 299,202, right? And our acceptance is long, right? So if we miss this trade for today, but we still possibly want to follow through for a continuation, right? Once we hit our play button and we get our next daily candle, right? We see that CVD that was at 299,000, right? Is now throughout that entire day, it's going to slowly push up, but now it's at 412,305 right on that day. So like I said, for our intraday trades, when we break that down, right, then we would be looking for a price to go above our level. And then now that lets us know that we have entered a sequence, right? If you set the alerts for sequence, on your trades that, if you were just eyeing some things and you didn't have time and you get that alert for a sequence long after you've already found that it had absorption, it had acceptance the prior day or the prior week or whatever, the prior week is going to give you your longer played out trades. And I'll show you an example of that as well. So these are moves that you're going to find that are really going to, explode and get that account all the way together. Right. As we see that we found our sequence here. Even if you would have just been in and out of this trade right here, you could have literally caught a $7 move right here in the first 15 minutes, right? Or you could have just let it run to the end of the day or the high of the day. And by 3 o'clock, you would have got in at 878 and closed out at 894, right? As I always say, that was a great move for the day. Okay. And if you want to get really interesting with all this stuff, then you can move on and you can try to find these plays on your weekly time frames, right? Mainly, I would say to kind of look for these things on your 2 hour, your daily, or your 4 hour, or your weeklies, right? So here, right, prime example of what I said, right? And I did call out Costco, I want to say like last Friday. But as you see right here, we broke out of our zone here, since what it says break, but you would have found acceptance here, right? What did we find here? We found our sequence. So if we would have been looking at this on a weekly time frame for that Monday, right? When it opened up and we already knew that we broke out of absorption, we seen that we would have had acceptance here. Like I said, it does say break on that label. Let me see if I think maybe the inputs, nope, I didn't. Okay. But I said you typically are still going to find the acceptance label right here. It's that little green box behind that break, right? But once it entered our sequence phase here, okay, so we go back and now we look to see exactly where did we go on our weekly level as far as our sequence, right? So that would have been Monday for the new week. And on Tuesday, well, we were actually already above it on Monday, right? We found our sequence on Monday for that week once price broke above it at 945, right, on Monday. So if we would have gotten to our trade on Monday, right, and then found we had absorption, acceptance, we broke above our high for our sequence, right? Our sequence triggered and at 931.50 and ran all the way up to 944.69, right? So if we would have exited our trade, treated it as a day trade, right? What happened once we found ourselves come back and pull back into this zone, right? We found that price wicked. It would have been a fair value gap here. It did get deleted by this candle right here on our weekly time frame. The fair value gap that would have went from here to here. And I'll just draw the box for you guys. So that way, I know most of you guys are familiar with this stuff. But our fair value gap would have been here, right? But like I said, this candle took that out, right? So once this candle took it out and closed through it, right? What had happened? Our New York session low, right, fell to. They stepped back in because of the sequence was already in motion, okay? And they had agreed that, hey, we are going for higher prices. So as we know, we all look for failed tools utilizing the strat. But once we seen it stepped back into our acceptance zone, price has already been accepted at higher prices. All right, so once we seen this fail to close up, we could have entered right back in position right here at 932.38, and we could have took our trade right back from 9.238 to 9.42.73. Right, we entering again on buying the dip. Okay, and let's go back and let's get into our new day here. Right, so we've seen that we found support here through overnight. And utilizing this fair value gap that was created from our trade on Tuesday, right? We've seen price pull back down, and what do we find again? We find another fail to at the New York session low at 8:48 a.m. And then what happens once price has still been accepted for higher prices? 9:30 at the open, we get our big strong move to the upside from let's just say 9:40, right? 9:40, and that one 15-minute candle closed at 9:50. That was 10 points. You could have closed out and said, okay, look, man, I'm done with this for the day. Been killing Costco all week, right? We caught our trade on Monday. We caught our trade on Tuesday. We caught our trade on Wednesday. Okay. And after it is in sequence mode, like I said, here we go again, right? Price opened up 9:15. Now, this would have been kind of a little bit, scary. Might have got shook out of play because you were expecting it to continue up. But even if you would have taken a small little loss here or whatever the case may be, because it did start to kind of range, or you did get, some push up here, and you might have closed out the trade and said, okay, I might have gave Costco a little money back on Thursday. But you already caught on Monday, Tuesday, Wednesday, and you might have took a small little L on them on Thursday, right? Friday, we had where price tried to push up initially. It got rejected, absorbed, pushed back down. Once we found our New York session low, again, we could have stepped back in and possibly even recovered some of that little loss going back to the upside, because we know that price has been in sequence. And yes, there are going to be pullbacks, right? But how we map that out from our weekly time frame and then broke that down to find intraday entries, levels where price will bounce off of those sequence levels that were already created, right? And push you back towards the upside to re-enter a trade. Whether you swung it overnight, yeah, you'd have definitely been probably down if you woke up in the morning and you didn't exit the trade up here. But if you just treated it as a day trade, you would have got paid on Monday, seen how it was acting in the pre-market. Okay, well, let's see, the sequence may not be falling through. What did we find here at 10:45? They still held, pushed price back up, got back in. What did we find here? That price created our fail 2 in the pre-market, opened up in multiple fair value gaps, which shows that displacement has occurred. Once it broke above this high, right back to the upside. So you could have entered Costco multiple times based off of a weekly process of absorption, acceptance, and then the sequence. Okay. Like I said, you can find this. Doesn't matter what we're looking for, whether we're using stock market, whether we're using futures, whether we're using ETFs or anything like that. All right. So we can go all the way. Let's use IWM, for example. That's a very good mover. People have been utilizing that because it is a cheaper ETF to be able to get into that does have good moves, right? And same thing, right? What do we find here? We see our absorption. I'm going to give you an example of how you honestly want it to go. But we did have our absorptions. We did have acceptance after it broke above our highs here. And then what do we have here? Once again, we have our sequence. Like I said, we're on the weekly time frame, everybody. Right? So it's like you can find these. Doesn't matter where you want to go looking. Right? So it would have triggered to let us in here. And I'm just going to give you guys a quick little breakdown again. Just so you can see multiple different examples. I mean, if it was bullish or bearish, it all works the same. This is just the ones that I have found right here. Okay, so IWM, now we did have a little bit of confusion here on Wednesday, but let's go back to the initial to see. Okay, yeah, Monday, we didn't have it exactly yet, but like I said, even on your intraday, right, you would have found on Monday, absorption, acceptance, sequence, right? Acceptance, sequence. Now, once we found our sequence, we would have took our trade for our sequence here. We got in around about 259.87. You could have followed this up to the day from 259.87, hit a high of 261. Okay, that was our weekly. We got rejected. And then pre-market, it broke above. I believe that was news. We found our fail 2, which you could have taken that knowing that we were probably I'm saying not probably, sorry about that we were failing New York session, London session lows to push below London session lows to push back up. So we could have been using this to possibly target these highs. But you see, it was just kind of struggling around those levels until we were able to find support above these levels, right? We did close above them a few times and pull back. This was one that was kind of fighting, but if you wanted to wait until it had closed above the weekly level for to get for that weekly acceptance, right? And like I said, even on intraday, we found our absorption, our acceptance, and then our sequence triggers, and it's giving you intraday plays as well. IWM, we know, can act a little bit crazy sometimes, right? But once we found where price decided to close for the daily above, right, which we really didn't get until Thursday, right? Once we got opened, we had our little fake out that IWM does sometimes, and then we took off as price had got above our weekly level of our sequence, right? And what did it do after that? It rolled off, right? Pushed up, okay? IWM's good examples. We can find this stuff, like I said, on gold, right? If we go into our futures market, right? So let's just shoot over here right quick, and I can just give you guys a rundown. Like I say, they're all just, same examples that you're going to see over and over again for a intraday type of trade where you could have taken this. Let's start. I don't like that example because I really want to show you guys exactly how it's honestly typically supposed to go. So I believe it was, nope, okay. Let's pull back a little bit. So, yeah, here we go. Here's one. All right, so how it's typically supposed to go is we find our absorption first, then we find our acceptance second, then we find our sequence third. This would have been at 10 a.m. on January the 8th, right? So usually you want to find it because it's a pattern that goes one candle after the next candle after the next candle, like I presented to you when I first started our video. Okay, so if we would have had our alerts, so we would have just been monitoring our trade, and now we go here and we find the exact sequence to the T. All right, that would have got us in at 4,448.2, and we would have took this trade in 2 hours to 4,472.50. Right. Our 15 minutes would have informed us to get in on the break of this candle right here, right, which would have been acceptance on a 15-minute time frame. It wouldn't have actually triggered until 10 a.m. Like I said, that was a 10 a.m. candle that we entered, so we would have known by our sequence triggering, right? Once we got in and we got in position in this candle, that we're good. So if our sequence triggered, and let's just say technically we didn't get into 44.50, right, at 10 o'clock, we had our fair value gap that supported the move up, because I say that was also our sequence from absorption to acceptance to sequence. And if we would have got in at 44.50 or even 44.52, had our stop, pushed our stop up into this fair value gap, the bottom of the fair value gap, we could have just thugged it out from 44.52, and about time our 11:45 candle hit, we'd have been from 44.52 to 44.72. If there would have been a full contract, or you would have added on to a position here, that could have led to a 20-point trade in gold, which would have been $2,000. Okay. We can move to whatever asset class it is that we're looking at, because this is how auction market theory works, right? That you find those points. Okay. Acceptance. Sometimes you will see acceptance and a sequence happen without necessarily having absorption, right? Those plays can still play out and be very good, right? But it is best if you find the sequence accompanied by absorption and acceptance prior to. But as I said, right, you'll find these cases all over the place, right? 8 a.m. candle right here. We would have got our trigger by having our alerts set, and that's going to be like one of the best things you can do with this is to set the alerts and then break down from that point. We would have had found our, and even once we broke it down from our 2 hour, right, what did we find here? We had absorption that was caught into a zone. We had our acceptance here where it broke above, and then we had our sequence here, right? Our sequence arrow, right? The trigger, 9:30, right? So even if we waited and we got in this trade at 9:30, once it opened up, wick down, the price started to push up. Okay, we always looking for our strat plays and strat setups and stuff like that. And you see, this is also a 2-2-2 bullish continuation, right? But that's why I said utilizing the strat with this can also lead to taking better positions, better entries, if you know how to read price and you stay patient and you set your alerts and look for these things that can lead to powerful trades. Okay, I'm gonna say even if you waited because 800 is a psych level, right? And you're like, okay, well shoot, I want to see it break above this 800 before I take position, right? You would have seen that as soon as 9:30 opened, it broke above the 800, and you could have been on 1 15-minute candle from 800 to 854, right? And you could have been like, hey, well shoot, I made enough money right on that one candle. I'm done for the day, right? Could have let the second candle play out and see what happened in the next 15 minutes. Okay, it did push higher and everything. So now that you're seeing price continue, you could have possibly stayed in for a longer position. But I just want you guys to understand that utilizing auction market theory with how the patterns show you everything of what's being done in the initiative, right? It's tracking the initiative of everything that you want to see, that how institutions are trading, right? They're absorbing price, they're going through a price acceptance, and then that needs to be maintained in order to keep everything moving forward, okay? I believe I've kind of touched on whether you are using stocks, whether you're using futures, doesn't matter, right? Sometimes like on stocks, on futures like YM, you may not find absorption. I can't technically explain why sometimes you won't, but you're going to find it more like on your ES, your NQ, your gold, utilizing it. Sometimes you'll find them, right? They do appear, right? It's just not as normal as, on NQ, ES, RTY, right? But then, like I said, remember that sometimes you can find, let me get rid of this stuff off of here, that you will find your acceptance, right? And this is on the 2 hour time frame. We found our fail 2. Then after that, we found our acceptance, right? Now we found our sequence. And once we found our sequence, right, that's when we enter on our sequence play. And you see YM, it went from 49,350, and that was on our 10 o'clock candle, 49,350. And by the time our 12 o'clock candle closed, we were at 49,705. Okay. So this is how you can utilize absorption, acceptance, sequence, and then also your acceptance and sequence to confirm that you're on the right side. Sometimes your sequences will have some type of little pullback in there. So if you do see your pullback in there, then just kind of wait for price to fully develop. Okay. Let's see if we can find one, because sometimes it will have those fair value gaps, right? So in a situation where you're looking forward to it happening, right, you have fair value gaps that are created. Hold on 1 second. Yep, just had to respond back to this text message right quick. My apologies. All right, so sometimes we will have fair value gaps that I created where price pulls back into it a little bit, and then you're just waiting for your sequence to kick off. Okay, like I said, if you had your alert set, you might have not got in at the initial, but let's say, because you also do have to be mindful that there's a fair value gap here. You would like to catch these. When you're catching trades like this, then you want to make sure that you're protecting your position, because we know that we are pushing into a fair value gap where there may be buyers sitting in there to push price back up. And I'm sure that's exactly what happened afterwards. But if we got our trigger on the 2 hour, did the sequence happen? And it would have happened as soon as it broke this at 8:06. Let's say you've seen the alert, you clicked over and it's already down here to 79.3. Then you got in and you're like, okay, well, shoot, once I got in and I made my entry, okay, let me move my stop from wherever it is to in profit. Right, and as it's pushing down, because we know it's a fair value gap here, okay, let me move it down some more. And okay, you might have got comfortable here at 770 and you're like, okay, well, I'm $23 in profit, whatever it is what it is. Okay, or push down and you're like, okay, well, I'm gonna move it down a little bit more. And in a situation like this, if you'd been kind of trailing it tight, you would have got kicked out, but you still would have been able to possibly profit from 48,793 to 48,742, or if you might have pushed it down further, came back, pulled back, kicked you out, so what, right? You still have other opportunities that would have got created, possibly even on this day, other tickers, symbols that may have presented those same things, right? As you see, I just switched, didn't even bother to move the time. What did we get here? Found the same thing at the same time, pretty much on RTY, right? Actually, we found our sequence early because our sequence didn't trigger to this candle. So once it hit here, and then we seen it pull up into this fair value gap, we could even possibly taken this before this broke right here, right? Still caught a couple little dollars over here. We might have been on this trade, then we got a signal for our sequence on YM, right? You find these plays all over the place, right? So if we're using stocks, if we're using futures, it doesn't matter. If we were using Forex, it's still going to give you those same type of setups, because we're using our CVD tool in order to be able to find these different trades and these different plays on our daily time frame, our 2 hour time frame, our 4 hour time frame. You can utilize them on intraday for more kind of a scalping type of play. So that would probably be more geared towards futures. If I was using options, I would probably be looking for those more on our higher time frames, daily, possibly weekly, to enter, to exit, if we do see things pulling back, and then also to add on to positions if you are buying out time for those. Just a last example here, like with CrowdStrike, found our acceptance, and then we found our sequence on 10 a.m. This is an example, like I said, where you will sometimes find a pullback, right? It wouldn't have triggered for a sequence until we broke above the high, though, anyway. So in the scenario, just like this, just to give you guys kind of just one final last example before we wrap this video up for the day, that when it got triggered until right here, right? Pushing into possible rejection area from our fair value gap, where it might have been hidden sellers up in that area. We would have got triggered here on a 15-minute time frame, because we know that, okay, if it does go into a sequence, we would have got triggered here. But also, like I say, on a lower time frame, right, you would have gotten this play earlier, right? If you would have been monitoring it on a lower time frame. It just all depends. Like something like a ETF, I might not utilize this on an ETF. Most likely, probably like a stock that has a good strong ATR, like Crowd, like Coin, like MSTR, Master, something that has a good strong ATR for the day. Okay, but I say here, you could have got in and been in this trade here after it found acceptance, but the only thing about it is, like I said, mind you, right, that you sequence when it triggered until here. So you would have to suffer through a little bit of pullback, right? And then as soon as you found that, okay, that they held, right, you would have been able to add on to the position or wait until it broke above. And then as soon as it broke above, right, you'd been able to add on to the position and be able to take crowd from 476, or if you just entered here where you would have got your signal out on a 2-hour time frame, 476, and took it all the way to 481. Okay, that's just giving you guys different case scenarios. But I just wanted to give you guys this quick breakdown on how to honestly utilize your CVD to find trades that can potentially turn into major hits on a daily, on a weekly, you know what I'm saying, your 2-hour time frames right here. In fact, perfect example right here. All right. This is your A plus setup that you are looking for. Right. And I think we caught one of these, as I explained to you, it might have been on a lower time frame, right? But this is on a weekly, guys. Okay. You find this on a weekly in the stocks, utilizing crowd on the week. And this was back in, this was back in September. Right. But I think we had already wound it back previously, right? We got our absorption, our acceptance, right? Our sequence, and literally from 447 to 502 in that 1 week, right? Well, no, my apologies. Yeah, well, actually it would have triggered here around 442, right? On Monday when this would have opened up, right? But you could have waited until it broke above this zone because we were trapped into a zone, right? But you catch these explosive moves and it traps and it pops out at 448.12 to 502, right? Your week is done, right? Off that one trade, that could have been a one contract. Percentages would have been ridiculous off of that trade. Just seeing that, okay, this process is kind of playing out. Once you see that it's playing out, absorption, acceptance, looking for it to possibly trend off into the sequence, right? Because of the absorption zones. I said I would have wanted to enter only once it got out of that zone with some force. So let's just add another line and let's just put it, he's going to drop it there, 571, right? And then this is going to be it for you guys. Okay, go back and we find that did pop above it shortly here on Wednesday, but let's see, did we have any other? Nope. Okay, so we never really got above it until Wednesday, right? We got shut back down, right? So that was our close, but then once it got here, you probably could have exited a trade and then just waited it out. Some people might have wanted to swing it. Once we found some support down here and started coming back up here, you might have wanted to try to enter this trade for a swing, right? Which would have turned out your day great the very next day, right? After you found support. Or you could have just waited until you got a consistent close. If you would have gotten in on Wednesday to take the trade and you would have tried to enter, which would have honestly given you guys a reason not to enter, is because it never, once it closed, it never broke and continued up, right? So using our strat, that's how we want to enter our trades. Once it breaks and it continues up above the level, which it didn't do. I say here you might have wanted to enter for a swing. Okay, but we found support. After it failed to break above, then next day we'd have been up on a swing, right? If we wanted to wait until Thursday, once it pushed back down, broke above that high, and we already know that we are now for surely in the sequence, took off 473, 503, right? Kind of chopped around, right? If you'd have swung it, cool, you made a lot of money. Like, okay, well, I'm gonna exit out of here, and there you go, right? So that is how you guys utilize absorption, acceptance, and sequence to find high probability trades on a weekly time frame, daily. If you're using futures, then you can utilize your 2-hour time frame as well. I hope you guys enjoyed this video. Have a great day, and please take the time to look over these things and utilize the tools that I've showed you guys on how to map out these plays to be able to find high probability intraday trades, possibly daily swings, possibly weekly swings in order to increase your portfolio. Thank you guys. Have a great day.